Imagine waking up in 2026 to find your savings worth 20% less, not because the dollar collapsed, but because it's losing its secret weapon. Stick around to learn why and how you can profit from it. Hey everyone, welcome back to your channel name. Today, we're diving into the US dollar in 2026. It's not crashing like the doomsayers say, but it is losing its weapon status as the world's top reserve currency. According to the IMF, the dollar's share in global reserves just hit a 30-year low at 56.9%. That's down from over 70% 2 decades ago. Why? Overuse as a sanction tool, massive US deficits, and countries diversifying away. But here's the good news. This shift creates huge opportunities for smart investors. By the end, I'll show you 3 simple steps to protect and grow your money. First, let's talk weaponization. The US has used the dollar as a geopolitical tool over 10,000 times since 2022 through sanctions. This freezes assets and cuts off access. Think Russia or Iran. But now, countries are fighting back. China and India are trading oil in yuan, not dollars. Result? Emerging markets are ditching USD for alternatives. As Wired reported in late 2025, alternative payment systems are bypassing the dollar, eroding its dominance. Second, America's own finances are a mess. The fiscal deficit hit $1.9 trillion in 2025, and the current account gap is at 6% of GDP. The widest in years. With Trump 2.0 policies risking Fed independence, Powell's term ends May 2026. Trust is fading. Central banks are diversifying. Gold's share in reserves doubled to 9% in emerging markets. As JP Morgan notes, this gold rush could push prices to $4,000 per ounce by mid-2026. Third, the world is diversifying. The dollar's reserve share dropped to its lowest since 1994, per IMF data. It's not a cliff, more like slow erosion. Experts like those at Atlantic Council warn, if this continues, US borrowing costs rise, global influence shrinks. But for you, this means opportunities in non-dollar assets. Step 1. Diversify into gold. With EM banks buying record amounts, prices are set to hit $4,000 by mid-2026. Start with ETFs like GLD or IAU. Easy, liquid, and protects against dollar weakness. Aim for 5 to 10% of your portfolio. Step 2. Bet on rising alternatives. Currency ETFs like FXE for euros or CYB for yuan can hedge your dollars. With BRICS pushing non-USD trade, These could gain 10 to 15% if dollar dips to 94 on the index, as Morgan Stanley predicts for Q2 2026. Step 3. Build a resilient portfolio. Mix U.S. stocks with international ones via ETFs like VXUS. Remember, this isn't financial advice. Consult a pro. But acting now could turn dollar erosion. If this helped, smash that like button and subscribe for more finance tips. We're building to 1,000 subs for monetization. Drop a comment. What's your plan if the dollar weakens? Check the description for links to these ETFs. Thanks for watching. See you next week with inflation hacks for 2026. Stay smart with your money.